All right, guys. One last video for tonight. I don't want to confuse anybody, and so just a quick analysis on the candlestick structure, the 15-minute window, and 15-minute time frame. That way you guys can see what I'm talking about on the analysis for tonight and why I'm buying USD JPY instead of selling it. So let's hop in here real quick. All right, so let's get on here. So a little quick analysis here on the 15-minute chart. Now, we're on a brand new day, right? Today's the 5th. And you can see that they shot it down here, built support. And the reason why I wanted to buy it was because it didn't break 111 to 110, 110.9 or whatever. It needs to break 111. That's what it needs to break. If it doesn't break 111, then I'm not selling anyways. And I'm still long-term. I'm still going long-term buy on the dollar because I send you guys that analysis on the dollar based on the weekly chart. All right, you have to look at the weekly chart. I mean, let me cut out my horizontal lines here. Let me just move them down, okay? I mean, by looking at, by looking at this new weekly candle, this weekly candle is going to end up being a bull candle from what I'm seeing right now. And to test 112.5 and to test 113 again. On the if we were to draw a trend line, I mean, it basically hasn't even broken a weekly trend line. And so those that use trend lines, you can see that it hasn't broken the trend line at all. So you can clearly see how strong this trend is on the uptrend for USD JPY, even though it did a massive pullback, hitting 113. People call it as a correction or just a little retracement, but their long-term, our long-term, projection for this price to break would be 114 before we decide to sell it back again. And so overall, it is on a pretty strong uptrend until it comes and tries to breach 114 again. So from there, we'll see where it goes. Most important thing, like I said, back to the 15-minute chart, is that the opening gap was down, but when the opening gap is down, then you buy the gap. If the opening gap is up, then you sell the gap, and then from there, it's going to find a direction. Okay, it gets a little tricky right here because we see a lot of consolidation. So if you don't have the patience, then you get yourself caught and say, I'm just going to sell because I'm not making any money buying it. You got to have the patience. Those first couple hours of Tokyo is really, really tough to have patience because you're anticipating the markets. You don't know which way it's going to go. And if you want to scalp it, you can, but I'm not looking to scalp anything right now. So here, I mean, it's not worth to me scalping 3 to 5 pips. I mean, unless you're using standards. So ultimately, let's zoom in here. Okay, where is USD JPY headed? Based on price, if it doesn't break previous low, this is previous low here, then come to test break that. Did not come to test break 111.1. So that tells me I'm going to buy it. That's my first confirmation. Here, a lot of resistance. It came back down again, but it never came back to break the opening gap anyways. Okay, support, boom, shot back up again. So based on naked Forex and price action, you're looking for a buy because it never came down to test low and never came down to break a previous low. So that's the most important thing. Those that are using stochastic and RSI, here, let me put on stochastic and RSI here so you guys can dive in here. Yeah, I'll put the moving average here across. Let me pull the indicators here for you guys so we can explain the difference from going naked Forex and using RSI and stochastic. Because I know a lot of you guys are using indicators right now. So with the RSI, it's a little bit too late. You know, RSI is coming to breach back at 70 here, and it's already above 60. Oh, what I have, I'm sorry, you know, I have RSI both times. Whoops. I need to put stochastic on here. I'm gonna put stochastic on so you guys can see what I'm talking about. Oh, come on, bro. Put stochastic on here. I want to show you guys the difference. Okay. Stochastic coming overbought. RSI is not overbought yet, but RSI is coming up to 70. Here people would sell it, right? Because it's overbought on stochastic. I'm not selling it regardless. So if you look at the moving average, it made this crossover here at 111.2, and it's slowly creeping back up again. And so you can see the 9 is crossing, going up, and that is your confirmation of buying it. I would rather follow the 2 moving averages than the RSI and the stochastic. Reason being is because those crossovers are more important because they're following the candlestick structure. Versus RSI and stochastic, they're just going off of price on volume. So if that's what you want to follow, you can, but it just takes forever to make that decision. And I mean, I'm looking to buy long term, so I'm not going to waste my time trying to look to scalp. Oh, like here, there is no point trying to sell it. You can see UJ is trying to push back up again. And you can clearly see that stochastic is trying to, this blue line, this is your main line, that blue line is trying to push even higher. You have to remember that if you use stochastic, you can't just look at 80 and 20, you have to look at 0 and 100. Anytime it's above 80, you got to look and see how much more further this uptrend is going to go. You can't just say that, oh, it's above 80, so I'm going to short it. You'll get yourself caught on the uptrend. Same thing on the downtrend. When it's oversold under 20 and it's still pushing down, like how this was below 20 for a while, you're going to get yourself caught following stochastic. You have to follow the candlestick structure sometimes. If you don't follow the candlestick structure, then you're not going to know your next level of support and resistance, especially following the trend. And this is just a 15-minute chart, so I'm showing you guys the MA cross, the RSI, and the stochastic. But I'm not using that anymore because it just gets too confusing trying to figure out when it's overbought, when it's oversold. And then you get the crossover, so then you don't know if you're going to follow the crossover anymore because it's oversold on stochastic and RSI. And that's what confuses me. Your most important window is your main window with the candlesticks, looking at price and the moving averages. If you want to use the moving average, you don't have to, but I mean, I'm not using it. So very, very important thing that I'm highlighting here for you guys. Those that are using the moving averages with the RSI and stochastic. And when you get comfortable, take it all off. Just take it all off. Like right now, like I said, right now I'm looking for USD/JPY to test break. What is this? Yeah, pretty much 111.5, and then come test break. Well, pretty much these two resistance, 4.5 here, and then 6.5, and then back to 7.5. 4.5, 6.5, 7.5. Or you can do 4.5, 5.5, 6.5, 7.5. Every 10 pips. Every 10 pips, look for your next target. Basic price reading, basic price structure. Don't be like, oh, we'll put Fibonacci here so that I can figure out what 31.8 and 61.8 is. No, that's too much. Basic price structure. We know that it needs to break this 111.8 with a 111.85, right? It needs to break that. So it's breaking it down every 10 pips, every 10 pips, every 10 pips. Right? Our next target is 4.5. Next target 5.5. Next target 6.5. Next target 7.5. From here and 8.5, we'll see where it goes. That's it. That's pretty much all I'm looking at. Breaks above there, 112 all the way. 112, 112.5, 113, 113.1, previous high last month, and then from there 114, and that's it. And we'll see if it breaks 114, and then that's when we probably end up selling anyways. So pretty interesting to see where USDJPY is headed. And that's all I got for you guys. And it's all 15-minute chart. Very, like I said, hop into the 15-minute chart if you want to get into naked Forex. Draw your horizontal lines, like just 2 horizontal lines, like how I would do it. Previous high, previous low, and then we'll see if it tests break. If it tests, like I said, if UJ came and test broke this, I would be selling all the way, right? But since it didn't break this, guess what I'm gonna do? I'm gonna buy it. I'm not gonna sell it. There's no way I'm gonna sell it. So you have to just sit and wait and let it play it out until it finds a direction. I mean, it didn't really find a direction until like an hour ago. So usually, like I said, usually the first 2 hours of Tokyo, it just sits there. It doesn't really do anything. And then it gets confusing because it just goes up, down, up, down, up, down. It consolidates in that price structure. So when it sits here like this, it gets confusing because we don't know where it's going to go, right? And so you just have to wait it out. If they're not going to send it down, then they're going to send it back up. And that means they're going to send it back to previous high to test it. And that's it. That's all I'm looking at. So gold did a pretty good retracement going back to 1217, but now it's back at 1215 right now. So like I said, I'm looking for gold to break 1200 long term, break the 1200 back to 1180, back to test 1150's weekly low, weekly support. And let me show you guys that. Let's see here. Remember, gold hit 1219, well, pretty much 1220. Gold hit 1220 based on NFP being bad. If gold doesn't break 1220, then I'm not buying anyways. There was no point buying gold anyways. Your gold's not even testing previous high from Friday. So if it's not going to test previous high, guess where it's going to go? It's going to test previous low, which was 1204. And so there ain't no point trying to mess around, trying to buy gold. Unless we're just going to sell the dollar for the bread news, then yes, we would buy gold. And like I said, based on the weekly chart, I have it outlined here. What is it? 12. No, not a weekly chart. I'm sorry, monthly chart. There is no other support until we come test 1150. This is 1160 and this is 1140. So in the middle is 1150. If it breaks 1150, and if it breaks 1150, then 1060. It's crazy. I don't know if it's gonna come there, but if it does, that's even crazier. So where things are headed for gold right now, long-term sell. You can see how strong these red candles, these bearish candles are right now. And if they're gonna send it down, they're gonna send it down. So it's pretty strong sell. And I haven't seen gold come back to retest previous highs anyways. It's just been breaking support ever since it could not. You can see these wicks here, 1, 2, 3, and the 4th wick, which is April, which started the sell at 1360. So that tells me that 1350 and 1360 is pretty strong resistance when it comes back to test that previous high. And it's almost like what it did here back last, was it 2016? Yeah, back in 2016. So can it do what it did here? Yeah. From here, we'll see where it goes. Once it breaches 1200, then I'm basically looking for 1180 off the weekly chart and then 1150 off the monthly chart. That's it. That's all I'm looking at. So we still have another 70, 80 bucks to go. That's a lot of money to be made off of gold if you're gonna sell it. So don't take my word for it. I mean, that's just my analysis. And if you have any questions, let me know. So I mean, I've been up since 4 in the morning, with the family. So, but I mean, I'm trying to accommodate as much as I can with you guys. So I mean, yeah, it's Sunday. Don't get too excited. It's just Sunday, and make sure that you don't get yourself caught, hop in on too many trades. So we still got Monday all the way through Friday. So just take it easy tonight and let the trade. I'm writing these trades out, and so can work on this little $100 account, and we'll see where it goes for tomorrow. Because tomorrow, we have to pay attention to New York sessions. We have to pay attention to Trump. We have to pay attention to the trade wars. We have to pay attention to unexpected political events that are going to drive the markets for this week, especially for New York sessions. I can't stress that enough. So it's pretty much all I got for you guys.